Alright, let's start with question number 2 now. Alright, so in this question, we have to prepare the journal entries required for items 1 and 5, and the narratives are not required. So this approach is always beneficial for you, that if you would always read the requirements first and then solve the question. Alright, so Ramla has calculated her draft profit figure for the year ended 28th of February 2023. Adjustments in Ramla's ledger accounts have still to be made for the following items. An amount of $99 owed to Ramla by Mai is to be written off as irrecoverable. Fixtures and fittings of $875 were purchased on credit from Padma. A loan repayment of $500 have been incorrectly recorded as loan interest. Rent paid $350 has been recorded as $530. Drawings of $120 has been debited to the wages account. So we need to prepare the journal entries for these items, and we need to correct these entries, or rather enter these entries into our books of accounts. So let's start off with the first entry. We have an amount of 99 which is owed to Ramla by Mai, and it is to be written off as irrecoverable. So let's go over here to our journal. So in our journal, we would first write item number 1, and since Ramla is the owner of the business, so what would happen over here is this, that so we would create the irrecoverable debt account as debit, which would be 99, and my over here would be credited by 99. Similarly, if we go to our entry number 2nd, it is fixtures and fittings of $875 were purchased on credit from Padma. So over here we are buying fixtures and fittings, so we need to write over here we are buying fixtures and fittings, so we would write entry number 2. So since we are receiving fixtures and fittings, I would write fixtures and fittings over here. And on credit side, we would write Padma. The amount being $875. For our third entry, we have a loan repayment of $500, which has been incorrectly recorded as loan interest. Alright, so what has happened over here is that we repaid part of a loan, but it was treated as a loan interest. Now loan interest is an expense, and the payment of the loan naturally would be a reduction in our cash. So the correct entry to reverse this would be the following. So we would debit the loan as there is a reduction on the liability of the loan, and on the credit side we would write loan interest to reduce the amount of interest or the excess. So for the entry of this adjustment would be loan payable would be debited by 500, whereas loan interest would be credited by 500. Now moving on to our fourth entry, which is rent paid $350 has been recorded as $530. So what we have done is we have overstated the amount of the rent that we have paid. Now naturally, if we reduce $530 by $350, we would be getting $180 as a difference. So what we have done is that we have overstated the amount of our rent paid by $180. So we need to reduce that. Since rent is an expense and expense has a nature of a debit, so what we would be doing is that we would be crediting the rent account by 180, whereas we would be debiting our bank or cash account by 180. Coming on to our fifth adjustment or fifth entry, it is drawings of 120 has been debited to the wages account. So accidentally what we have done is that we have debited the wages accounts with our drawings. So we need to credit the wages account and debit our drawings account to rectify this error. So drawings account would be debited, whereas our wages account would be credited by 120. So this would be part A of question number 2, and we'll move on to part B.